Hello, one of the most fundamental questions when stepping into the world of investing is, which market should I trade in? Today, we'll cover the four most popular market types: cryptocurrency, Forex, stocks, and futures. I'll clearly explain their characteristics, differences, advantages, and disadvantages, and who each market is suitable for. Let's get started. Cryptocurrency market. The crypto market is where digital currencies like Ethereum, Solana, and Bitcoin are traded. Its 24/7 availability sets it apart from other markets. You can trade even at 3 a.m. This offers great flexibility, but beware. Being always open can also increase the time you spend in front of the screen. Volatility is very high. By volatility, we mean that price movements happen quickly and sharply. For example, it's normal for Bitcoin to fluctuate 10 to 15% in a single day. This means both huge opportunities and significant risks. Crypto is ideal for investors who seek high risk and fast movement. However, jumping in without experience can lead to serious losses. Forex market. Forex is the world's largest market, trading currency pairs such as EUR/USD or GBP/JPY. Trading hours are set from Monday to Friday, 24 hours a day, with weekends closed. The Forex market generally allows high leverage. For instance, a 1 to 100 leverage lets you open a $10,000 position with just $100. This amplifies both profits and losses. If you're not familiar with leverage, check my channel's leverage video for a detailed explanation. Forex is suitable for those who follow macroeconomic data, focus on analysis, and prioritize risk management. Stock market. The stock market is where you become a part owner of companies. When you buy a share, you own a small piece of that company. Trading hours are usually limited. For example, Borsa Istanbul opens at 10 a.m. and closes at 6 p.m. You can earn in two ways: value increase, profit if the stock price rises. Dividends. Receive a share of the company's profit during specific periods. The stock market is suitable for investors who prefer a calmer, long-term approach and want to use fundamental analysis. Futures. Mark futures contracts are agreements to buy or sell an asset at a specific price on a specific date. You can trade futures on assets like oil, gold, indices, or crypto. Futures trading allows earning from both rising and falling prices, opening large positions with a small amount of capital using leverage, managing contract durations, as you must close the trade before expiration. Futures are suitable for experienced and strategic traders. Which market is right for you? If your time is limited, consider stocks or long-term crypto investment. If you want to be active in the market throughout the day, Forex or crypto is ideal. If you want to diversify across markets without significantly increasing your risk, you can try futures trading. Remember, markets don't make you profitable, correct strategy and risk management do. Whichever market you choose, first learn, practice, and stay disciplined. If you found this video helpful, subscribe to my channel, turn on notifications, and share in the comments which market you trade in. See you next time.